There's a war happening right now, and nobody fired a single shot, but gold is winning. In January 2026, gold crossed $5,000 an ounce for the first time in human history. Not $3,000, not $4,000, $5,000 for a chunk of yellow metal that cannot run software, pays no dividend, and sits in a vault doing absolutely nothing. And here's the strange part. The world barely noticed. But if you know what to look for, gold crossing 5,000 is not just a number on a screen. It is a distress signal, a flare going up over the entire global financial system, saying that something beneath the surface has fundamentally changed. Today we are going to break down exactly what that signal means, who is driving it, why it is happening right now, and what it might mean for the next few years. By the end of this video, you will understand something about the modern financial world that most people around you simply do not. Let us start with just the raw facts, because they are genuinely staggering. At the start of 2023, gold was sitting around $2,000 per ounce. Stable, unremarkable. Then 2024 arrived, and it climbed to $2,600, a 30% gain in a single year. That alone would have been exceptional. Then 2025 happened. Gold surged another 50+%, ending the year above $4,000. That made it the best performing major asset class on the entire planet, beating the stock market, bonds, real estate, and most cryptocurrencies. Then January 2026, $5,000. Gold has roughly tripled in under 3 years. The last time it did anything like this was the 1970s. And if you know what happened in the 1970s, that comparison should immediately give you pause. To understand why gold is exploding right now, you have to understand what happened on August 15, 1971. President Nixon went on national television, interrupting a popular Sunday night show, and announced what he called a temporary measure. The United States was suspending the convertibility of the dollar into gold. Before that moment, the global financial system had been anchored by the Bretton Woods Agreement, a post-war arrangement where every major currency was pegged to the dollar, and the dollar was backed by gold at a fixed rate of $35 per ounce. If you held dollars, you could theoretically exchange them for physical gold. Nixon ended that permanently, despite the word temporary. From that day, every currency in the world became what economists call a fiat currency, backed not by a physical asset, but purely by government promise. The United States could now print dollars without needing gold to back them, and print it did. The US now carries more than $36 trillion in national debt. The Federal Reserve's balance sheet expanded from under $1 trillion in 2008 to nearly $9 trillion at its peak. 55 years of spending promises that gold would have constrained. And here's the key insight. Gold has not gone away. It has just been waiting. Every few decades, when the cracks in that system become visible enough, gold reminds the world that it is still there. Right now, the cracks are very visible. Nixon called it temporary. 55 years later, we are still waiting. The most expensive temporary decision in financial history. Here's the part of this story almost nobody is talking about clearly. The biggest buyers of gold right now are not panicking retail investors or hedge funds making speculative bets. They are governments. Central banks around the world have been buying gold for 4 consecutive years at a pace not seen in over half a century. In 2022, they purchased over 1,000 tons. In 2023, 1,037 tons. In 2024, a record 1,086 tons. And the names behind those purchases will surprise you. Poland, a NATO member, was the single largest central bank gold buyer in all of 2025, adding over 100 tons to its reserves. Kazakhstan, Azerbaijan, Brazil, China, and Turkey all added significant quantities as well. Why? The answer crystallized on February 24, 2022, the day Russia invaded Ukraine, and what followed. The United States and its allies froze $300 billion of Russia's foreign currency reserves. Overnight. With a political decision, those assets, dollars, euros, bonds held in Western institutions, were simply locked away. Every other government on the planet watched that happen and drew the same conclusion. Assets held in someone else's financial system are not truly yours. A political decision made in Washington could render your reserves inaccessible overnight. Gold sitting in your own vault, in your own country, answers to nobody. It cannot be frozen. It cannot be sanctioned. It has no off switch. That is why governments are buying it. Central bank buying is the structural engine. But layered on top of it is something more emotional and equally powerful. The dollar's share of global foreign exchange reserves has been quietly declining for years. In 2000, it was around 70%. By 2024, it had slipped to roughly 58%, falling 1 to 2% per year as countries in the BRICS bloc build trade systems that bypass the dollar entirely. China and Saudi Arabia have already settled oil trades in yuan. The direction of travel is clear. When countries reduce dollar reserves, they need to hold something else. And when you go through the list of alternatives, euros, yuan, yen, every option has serious structural problems of its own. Gold, which no government controls and no central bank can print, keeps coming up as the only truly neutral answer. That is the structural story. The emotional story is simpler. The world is genuinely scared. The war in Ukraine, ongoing Middle East conflict, US-China tension over Taiwan, Trump's tariff policies reigniting global trade war fears in 2025 and 2026. Every crisis adds fuel to the same fire. And historically, when people are genuinely afraid, they buy gold. Not because it generates returns, but because it has held value through every financial collapse, every currency crisis, and every war in 5,000 years of recorded history. That track record is essentially impossible to argue with when fear is in the air. Here is the final piece of the puzzle, and it is pure math. Total gold demand in 2025 exceeded 5,000 metric tons for the first time ever. Annual mine supply grew by roughly 1%. 1%. You cannot spin up a new gold mine to meet rising prices. A new mine takes 5 to 10 years from discovery to first production. Environmental permits alone can take years. The equipment is specialized. And the easy deposits, the ones close to the surface, the ones with high concentrations, have already been found and extracted decades ago. What remains is deeper, lower grade, and more expensive to reach. So when demand spikes and supply barely moves, prices do not drift upward politely. They accelerate. This supply constraint is structural. It does not resolve in a quarter or two. It is measured in years. JP Morgan has set a price target of $5,000 to $6,000 per ounce by the end of 2026. Some analysts have floated scenarios as high as $8,000 if geopolitical conditions worsen. But here's the honest other side. Gold could correct, and sharply. T. Rowe Price has pointed out that gold's rally has become partly self-reinforcing. Momentum traders pile in as prices rise, pushing prices higher, attracting more momentum. That kind of cycle can unwind fast when sentiment shifts. A Ukraine peace deal, easing US-China tension, or a pullback in tariff threats could deflate the fear premium quickly. The deeper question is whether the forces driving gold, de-dollarization, debt-saturated governments, central bank distrust of the dollar, are structural and long-term, or temporary and reversible. If structural, $5,000 gold may look cheap in 10 years. If temporary, gold could give back a significant portion of its gains. Nobody knows which it is. Anyone who says they do is selling something. This quiet war driving gold to $5,000 is not fought with weapons. It is fought in central bank boardrooms, trade negotiation rooms, and geopolitical summits. Governments are quietly moving reserves out of dollars. Nations are building alternatives to the dollar system. And investors everywhere are placing the same bet, that in an uncertain world, 5,000 years of value is a better anchor than any government promise. Gold is not just a shiny metal right now. It is a scoreboard. And right now, the scoreboard says the world is nervous. If this video gave you a clearer picture of something you have been hearing about but not fully understanding, subscribe. We make these explainers so you can follow what is happening in the world without needing a finance degree. See you in the next one.